Hello, and thank you for watching another video brought to you by Behavioral Wealth Channel, where my goal is to help you change your behavioral decisions by improving your financial literacy. In today's video, I'm going to be reviewing some specific areas of most credit card statements to give you a better understanding on the impact of making just the minimum payments, along with how to determine your current interest rate that you're being charged. So regardless if you're trying to pay down a single credit card or multiple ones, understanding the interest rates and monthly payments may help you put a better plan together to help eliminate the debt faster. In this first example, you will see the December statement is reflecting a balance of about $1,400, $1,406.73 to be exact, and a minimum payment due of just $37.88. Now, although the minimum payment may seem low and easy to budget, I want you to pay close attention to your late payment warning. This section of the statement is important because in this example, you will see that a late payment will not only cost you an additional $40 late fee, but your interest rate may also be increased to a much higher rate of 27%, 27.24%, which is just crazy. For the last several years, most credit card companies have had to incorporate an interest impact grid similar to what you see here that gives account holders a better understanding of what the impact of only paying the minimum balance would do. So in this example, by only paying the minimum of $37.88, it would take you a total of about 8 years to pay off a balance of just $1,400. That's assuming you're paying just the minimum, and that you're no longer adding more debt to the balance. So not only that, but the additional length and time, along with the interest rate, would bring my total payments to roughly $2,700, $2,707. That's if I'm paying just the minimum balance. So by just charging a small amount of $1,400 to my credit card and only paying the minimum, I'm actually paying about $1,300 more to my overall balance compared to what I originally charged. Now, the second line does show how much faster you could pay off the balance if you increased your monthly payments to just $52 instead of the minimum. But don't get fooled by the words savings equals $835 in this example, because you're not actually saving money because you're still paying interest rate for however long you have the balance. This is just a way for the credit card company to reflect a difference, assuming you were paying the minimum, and to give you an idea of what paying just a little bit more above the minimum would do as far as the length of time and the overall interest. In your statement, you may also notice a section called interest charged. Since you're charged an interest rate whenever your purchases are not paid in full by the end of the billing cycle in which your purchases were made, the purchase interest charge on your billing statement is based on the individual credit card company's rate, as well as your current total balance. So depending on your credit card terms and agreement, along with your monthly payments made, this may fluctuate over time. The year-to-date grid, which again is reflected in most statements, will give you an idea of how much money you've paid in just interest alone for your credit card. This will also give you an idea, again, depending on your interest rate charged, how much is actually going to cover the interest rate versus the principal balance. And finally, you have the interest rate charge calculation section of your statement. This will give you an overall breakdown of the balance that is subject to the interest rate, along with the current annual percentage rate. In this example, the current balance is being charged a rate of 19.99%. So when putting together a plan to reduce debt, it is important to understand your terms and agreement, as it can play a factor in which debt you prioritize first in order to maximize your payments towards them. So I hope this video helped. If you enjoyed today's video, please like and subscribe to my channel for more videos to help you improve your financial literacy. Thank you.